Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Benny.
And is the bank crisis finally over? And is there a way to take advantage of that, like Burry possibly has, and I may already be doing? So this is a trade that's working out very well. We're going to take a look. Two Super Guys Trade Stocks. All right, remember this?
Yeah. His most recent 13F quarterly filing, we did a separate video on this.
Yeah, so this is Michael Burry's. It's not all of them. He's heavy into China. But I just want to show a couple things here. So WAL and PACW. So I've been very high in PACW. I did not make any money on it. I made like $12. That doesn't count. I sold before they had a major dip because banks are weird. You can actually be completely healthy and still die.
Yes.
It's the only sector that's like that. But I still wanted to play banks because the savings here is pretty wild. So we're going to take a look at some things. But one, Jerome Powell on 5-3, he said, and he was talking about the three banks. He said, really from the beginning, these were the three banks that were a problem. There was Silicon Valley, Signature, and First Republic. Those have all died. They're done. And he kind of alluded to the fact that the bank crisis in terms of shutting down is over, right? Now, after he said this, PACW and WL both got kind of crapped on, right? There was some bad journalism that happened. People said PACW was trying to sell, and so was WL. They weren't. This just happened. So this just jumped Monday, all right? They basically agreed, PACW, agreed to sell $2.6 billion worth of real estate construction loans. They're helping improve their balance sheet, give them more cash flow. They also got rid of a very high interest loan. That's hence the 20% deal, 20% increase. And they said, look, we're also going to try to get rid of another one, $2.7 billion worth, expected to close next month. It's reasonable to assume that there may be a giant jump in PACW again because they're they're at like 30% of what they were before the first shutdown. All right. And we've done a separate video. They're healthy. They, in my opinion, they do not deserve to be, it's my opinion, they do not deserve to be this low. It's wild. Like you see First Republic's earnings, they don't even answer any questions. They're like, this might be a problem. And then 5 days later, they shut down. Then the next day, they did earnings. They're like, we have so much cash. I don't know. We've like unloaded a bunch of stuff just in case something happens. Like they're much smarter. They're much better at their jobs. They're not stealing from the American people like the other banks were.
I love it.
So this is XLF. Are you familiar with XLF?
Yeah. Financial ETF. Yeah.
Yeah. So it's just all banks in the SPY, kind of, not really, but you can see we had a huge day on volume. Let me move my face.
On Friday.
Yep, on volume. We're kind of breaking out of that channel, and you can see when the crisis started, all right there.
Little waterfall.
So PACW is the same, right? We were chilling at $24. We were kind of hanging out. This is when more First Republic nonsense happened. Went down to $2. What the hell? Crawling back up on its way to $7. Also, I want to move your face. These are like trading stocks now. Do you see the volume?
Yeah, there was like literally nothing there before. Wow.
So before this happened, they were still trading shares, but it's so much of an exponential increase, you just can't see the bars anymore. Like it's wild.
Reminds me of that meme. You versus the guy she tells you not to worry about.
Here's WAL. So they're actually breaking out of their channel, right? They're chilling around $38 with a low of $9. It's disgusting. What an increase. They were at 72. Yeah. I wanted to play this. I'm gonna add in full disclosure. I just don't know if I'm gonna add into my current trade or buy some PACW. Okay. This is DPST.
Oh, a regional bank ETF, right?
3x levered. Yeah.
Oh God, Jesus. Oh, gasoline on
Hold
fire.
on, hold on. Hear me out. Hear me out. All right. This is a weekly chart all the way back before 2020. So you can see they're at like 120, and then they have, what is that, 60 ish, and then they're chilling down below $5. All right. So one, it should be noted, these lose value over time. So this is not going to go back to this number. That's not going to happen, right? It probably won't go back to this number. I don't think that's going to happen either. But it was insanely low. Let's just look at the daily here. So these are my selling points. This is what I'm trying to get to. Okay. My first selling point, 11, which I think is quite reasonable. I would probably take a hefty partial here. I'm going to show you where I entered and where I want to add. 20, I do think is possible. More likely 15. Because remember, once you lose 50% of your value, you have to go 100% just to get back to where you were. Because this is levered, you're really going to lose a lot of decay when you have these big drops in the stock, which is what a lot of people don't realize. So if they bought around 20, homie, that's a problem. That's not good. I don't know what to do in that situation. So this is where I'm at. So I bought 1,000 shares at 461 because it's just so low, right? So right now I'm up about 30%. I bought this like 3 weeks ago.
18% of which came in one day.
18% of which came in one day. But more importantly, it's a sign. It's not about the fact that 18% came in one day. It's the sign that the sector as a whole may be healthier and the crisis could be over. Now, believe it or not, hear me out. I would consider this safer than investing in PACW. Because this is 200 regional banks. This is like all of them, right?
It's more diversified,
People on Reddit could all just get together right now and just short, and hedge funds could be like, yeah, let's just kill this bank. And they can kill it. That can happen. That you can't do with any other sector, but you can do with banks. I consider this less risky than PACW and happens to also give you greater returns if stuff returned even half of the norm. That was my logic.
All right. It's a pretty interesting trade. I'm definitely intrigued.
I don't know what I'm going to do here, full disclosure. I would like to add, but I really like my buy-in price. I have a good stop-even price where if this fails, it's fine. I don't lose anything. If I add, my stop-even is going to be too high. So I'm either going to add to this or I'm going to buy some PACW.
Okay.
For a couple months.
Interesting.
Where are you feeling?
I think you got to do a little bit more due diligence on PACW, like as far as
Here's the problem. I would like one more earnings report. Their last earnings report was fantastic, right? And also, guys, this is high risk money. This is not. Don't throw a crazy amount of money. I threw a kind of an uncomfortable amount of money for me at DPSD, but the price was so insane. And if you look in the chart, they had pretty decent stopping volume that there was a low around there. PACW is kind of scary. So I get it. It's not. Yeah. It could literally just die. But the theory is, if I wait for another earnings report, it could be at $10, right? Because they're taking very healthy steps to make sure that their balance sheet is good to go.
Yeah, I mean, I'm optimistic when I see a bank unloading commercial real estate loans right now because, Munger has talked about this. There's estimations out there that $500 billion in value are leaving commercial real estate and moving towards the private sector, and that commercial real estate is going to be a potential area of weakness and then contagion amongst banks that are overly exposed to it. But I'm not a smart enough guy to know which banks those may be. So that's the real question I would need to look at is their commercial real estate portfolio and compare them to some other banks.
Ooh, that sounds like a video. If anyone wants me to do that, let us know. All right, guys.
All right. Catch you next one.